if it's that easy, it will not last. It's just a ridiculous thing that the market will. And now, I personally think they should. So just from a fundamental perspective, if it's this easy to just turn $100 million into $150 million, thinking the market will pay more for a holding company, then enough supply will come out that it will disappear. And you're already seeing that. Like, there's just too much supply. We saw it with SPACs. I mean, why do I think it? Ultimately, even excluding the supply issue, I think these things should trade at a discount to NAV. And just to explain what NAV is, net asset value. So, if you get $100 million by Bitcoin, right now it's trading in the public markets for $150 million. I think it should trade at at $80 million or $90 million. And the reason is, why do what gives it its value? Ultimately, it's that the company, if they need to, can sell the Bitcoin and return you the capital. So it probably shouldn't trade at a discount to NAV, but something like MicroStrategy, Saylor can't sell. He owns 3.5% of Bitcoin. The minute he starts to sell, let's say he needs to get cash to pay people out. The minute he starts to sell, the entire market's going to flee. And he basically can't. He owns too much. And if he actually really needs capital, everyone's going to want to front run him and sell the minute he sells that first Bitcoin. And it's pretty hard to find an OTC deal to buy for someone who's going to buy 3 to 5% of all Bitcoin. So I think these companies should trade at a discount because you can't really get the cash back. So like ultimately it's really worth less than the current Bitcoin price, because you're going to have to sell it at a discount to the current Bitcoin price. And I think that that's ultimately where we go. But we saw with GBTC as well. Like, if you look at the Grayscale ETFs, they were once the only way people could get access kind of in public markets to Bitcoin. And they started by trading at a 40% premium to NAV. But, by the time the ETFs came around, like in the year going up to that, they traded at a 30 to 40% discount. Like, these things and the sentiment towards these types of kind of financial engineering structures, not that there's much engineering going on, it's just taking advantage of this weird paradigm in the market that they want to overpay for these things, can change very, very quickly. And I think here you don't even have a narrative. Like, with the SPACs, you had a narrative. Like, you could say, no, QuantumScape is changing the world of batteries. No, like, whatever, DraftKings is the companies that SPAC, actually you could build narratives that could get people excited and create more about. Like, here you can get Bitcoin by buying IBIT. IBIT.
So this is the thing, right? It's become so easy now via the ETF.
It's so easy to get Bitcoin. So if there was a time where people couldn't get access to Bitcoin, then maybe you have a narrative like, no, this should trade at a premium because it's the only way people can get Bitcoin. Right now, anybody who has a Fidelity account or an account on E-Trade or an account on any of these things, other than Vanguard, but anyone who can buy IBIT, which is a publicly listed ETF and gives you instant access to Bitcoin with zero trading fees, zero. And, and a slight fee over the course of a year. So you have no need to buy these. There's really no narrative other than the market's doing it already, which is a really bad narrative. I'm going on Pio's podcast on Wednesday to understand it better, because he's the biggest bull for all this stuff. I guess Wednesday's tomorrow, but there's no narrative here. There's no narrative. There's infinite supply, and the natural economics should be on the other side of the premium discount. Like, ultimately, over time, that's where we're going. And I think and the speed of supply right now, I think we're going there sooner than later, because there's not much to keep it above. There's no narrative.